How you doing, everybody? John Darsie here, Editor-in-Chief of T3 Live, to bring you the daily recap, filling in for Scott. So basically we had another quiet day in the market like we saw earlier this week after that really fast start to 2013 following the fiscal cliff situation. Today, we just had another day of rest after yesterday's extension of 5-year highs. We've talked about the market is likely to rest after that fast start ahead of the meat of earnings season, which really starts tomorrow. We had Alcoa kick things off earlier in the week, and they had a decent report. Nothing that's really a game changer in either direction. But the real meat of earnings season comes next week when you have the banks reporting early. You have Google, so that's what we're really going to be looking forward to. Let's go ahead and take it to the charts. Take a look at the spiders right here. The spiders closed about where they opened. Nothing really to write home about. Some weakness earlier in the day. We're still sort of just resting in front of those September highs. It'll be very interesting to see how we treat those highs and whether we need some more rest to take them out, whether we test them and pull back, or whether we can get a push through. And as Scott always talks about, it's really going to be important to see how we close that day when we do test or push through those September highs to see what kind of commitment we get to that breakout. Wells Fargo reported this morning, the first of the bank stocks to report, and it could be a preview of what we'll see with the bank earnings. The bank stocks have had a very strong run over the past few months, and you saw a decent report from Wells Fargo. They beat on EPS by 2 cents a share, but opened lower due to some talk about margins. Interest margins weren't what they were hoping they would be, and they were lower than the year ago period. And that caused Wells Fargo to close a little bit lower, but it was able to rally off its lows of the day. So it's nothing really that's a game changer for the banks. The other banks sort of rested today ahead of those earnings next week. You see Goldman Sachs there. JP Morgan, same story. Bank of America is the one that was really strong over that $10 buy price. We got over a 20% move and had that harsh pullback on Wednesday. But since then, Thursday it rebounded well, and now it's just sort of waiting for more bank earnings next week. But as you'll see here, it held its 21-day moving average, which is a gauge that we like to use to judge the composure of a rally. And so right now, the composure for Bank of America is still intact, and we'll wait for earnings next week. A stock we've been following very closely recently has been Facebook, as it's continued to rally. Ever since that November 14th short squeeze, really, where you had the 800 million shares. The IPO lockup expired on 800 million shares, which is 30% of the net flow to the stock, and a lot of people seem to position short there, and we got that igniting bar. The stock hasn't really looked back since. In Scott's 2013 predictions, we highlighted a cup and handle pattern. If we zoom out a little bit, you'll be able to see it better. So we had the cup here, we had the handle here, and we put the predictions out on New Year's Eve, which was this day right here, as we were still in that handle pattern. And very quickly, we've gotten that move to the beginning of our target on that, which was around 32. And today, it continued higher. It's not something that I would look to chase in this area, but you can note Facebook's strength. And just because it's not a long here, it's not a short either. Some people might be looking for a cute short. I think at this point, Scott was talking this morning about how he got out of the remainder of his long position at Facebook. So just something I wouldn't chase it here, but I wouldn't blindly short it either. Perhaps next week we'll look for a red dog reversal, a push-through failure, but right now it's just something to take note of and keep your eye on. Another stock that if we go back to the charts, had a very strong move today that people were focusing on the floor was RIMM. It had sort of been basing after that gap down in late December. Just put in a pretty tight consolidation, and today we got a very strong move out of that little base. And some traders were able to take advantage of it. A very potent move. It continues with the theme that we've seen over the past few weeks and just the beginning of this year of some laggard stocks really starting to perk up. It could be a January effect type situation where people sold these stocks at the end of last year for tax purposes, and after the 30-day wash rule, looking to get back in. But RIMM, like a GMCR, like a Netflix, like stocks like that, those laggard stocks have really started the year strong, and it'll be interesting to see whether that continues or whether it's just sort of a transitory thing that we're seeing right now. Another stock, and I'm going to look at two more actionable setups right now that I think next week should really be firmly on people's radars. especially as bullish composure remains intact and we're getting some healthy rest, is Amazon. You know, we talked about Amazon last week. It broke to new highs, very strong move. And what you really like to see with stocks when they break to new highs is you don't want to see a stock go parabolic and chase that type of move. Facebook's had a great move, but it's not the one that I would chase. And Amazon, on the contrary, is basing very nicely above these new highs. Now, you had that potent bar, and we still haven't closed, you know, below that level and tested this gap really. You have a very nice clean consolidation here, and today Amazon was strong. I would look next week, you know, above this pivot high, which is 269.73. I would definitely look at that as a momentum area. Amazon, you know, continues to be very strong and one of the leading stocks in high beta tech, and I would definitely focus on that ahead of definitely Apple. We'll go quickly to Apple, give the obligatory reference to that. Remains very heavy. It's not really worth being an setup that you look, an actionable setup you look for on your radar right now, but you know, it is a very noteworthy stock, and if we see some action in it next week, we might put it back on the radar, but for right now it just remains heavy and out of play. We'll just take a peek at Google. It has earnings coming up. It's done a great job of taking back this big wide range bar, which was its last earnings report, which was extremely negative and got leaked intraday by the printing company that prints its earnings. But like I said, it's been able to shrug it off, and it's getting back towards near its highs. But that's something that we'll focus on next week. Amazon's more compelling. And the one more stock I think that has a sort of similar setup to Amazon that's near its upper levels and basing well is CRM. And we saw a great move November, December in CRM, and since then is generally held above its 21 period. It sort of tested it here, but rebounded well, and now it's basing nicely here at these upper levels. So I would keep that firmly on the radar for next week as well. And that about does it. There's not much else to really write home about today. It was a quiet day, more rest, which for short-term traders it might have been a little bit frustrating, but for swing-type traders, this is healthy action. See digestion at upper levels, and the bullish bias remains firmly intact. So thank you guys for putting up with me on video this week. I enjoyed getting my face out there a little bit and doing some videos. Hopefully in the future, maybe once a week, twice a week, I can get on the morning call with Scott, but we'll try to get some pretty female faces in front of the camera again. But from everyone at T3 Live, have a great weekend, and we'll see you in here Monday morning.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.